Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, September 27th, 2018, just after 4:30 p.m. Central Daylight Time. Thanks so many of you for attending our live webinar. Had a great time with it, showed you things. And by the way, you got to break out to the downside in the gold market. Silver's trying to hang on, copper giving things up, probably in part due to the rally in the dollar. Now, one of the things I like to talk about, and I did a bit of it in my webinar, and by the way, if you didn't attend the webinar and you go to our website, you'll see if you go to our video section, you can view it there. But to make a long story short, when you get a 1 o'clock meeting or announcement from the Fed in the afternoon, that's Central Daylight Time, and then 1:30 a Fed press conference that lasts almost an hour because I was at Fox waiting for it to end in the studio downstairs in the Board of Trade here, and then I went on TV. What happens is the Asian markets aren't open, the European markets are already closed. You have to wait for the full reaction outside of America to cycle. And I realize with 24-hour trading, you all think the traders are sitting there and they're doing all that. Folks, I wish I could tell you that's how it works. When first 24-hour trading came on, we used to be open here 24 hours a day, waiting for the phones to ring, and it's just not the way it works. People go to sleep in their own locale, and nothing happens at those hours. Trading thins out, and then you get the Asian Open and then the European. I think that was the delayed reaction we saw, and it's certainly an ugly time for the gold as we can look on the chart. When you look at this chart, was that the rally? If it was, then it's the question, are we going to go back and challenge that 1161.40 area? But for the moment, it certainly looks on a weekly chart of closes bad. You're down $14 for the week so far as well. When you take a look at the daily bar charts, I don't think you can get away from the fact that you've broken through what we'll call this baseline right here. And when that occurs, I get nervous because this acts as pressure that can drop the market back down. When I put the swing line on the chart, I'm even more bearish right now. You have lower highs, lower lows. That is bearish. The market is under the 18-day average of closes. Admittedly, once again, if you look at today, it fought right at that 18-day average and tried to slip back. So the question is, where are the Bollinger Bands? And the market's under it. The fact that this market has traded sideways so long, the big question for tomorrow, is this a breakout or is it a false breakout where the market pulls into the Bollinger Band? If it's under it again, it's not a good sign. The bears will have pretty good control of the market. Yes, the market is oversold, so the first challenge of the lower Bollinger Band, often they come up, but that was yesterday. Today is follow-through. That's a different scenario. And in order to get a play going, whenever you get real tight action, a common theme, it's not every time, but it's very common, is you'll get overbought or oversold as you try to break out one way or the other. I don't put the day-to-day credence on it when you come off of this, the way I do when you normally have a broader market area and then you hit the Bollinger Bands, and I use them a little different. So you twist it a little. Right now I'm going to call the bias down, the trend down. Yes, the market's oversold, and the big question, is the market going to get traction to the downside? I can say there's nothing on this chart that I see as bullish. In the ETF, GLD, it's the same setup. Lower highs, lower lows, came out of the thin sideways action here, bearish. Under Bollinger Bands, one of the things I teach in my charting course, if you go look at it, and by the way, in our charting course, if you type in the word SAVE 40, S-A-V-E 40, all one word, and you go to buy it, you're going to get $40 off the course. Just a little secret there, go to our website. It's a good time to do it, and that won't stay up very long that way. But lower highs, lower lows, bearish. GDX came here. Now, if we take a look at this chart, I want to be certain. This high was 1911. You rallied back up, you have a double top at 1911. and now you started busting through these numbers. Today you respected the 18-day average. That's very common. You'll hear me say over and over. You get down to a number when you first rally, that could be resistance. You go up, pulling back to the 18 could be support. Doesn't have to last any longer than that. But this one rally that we got here, if you go back on the chart, that was the only one we did. Is that it, or is the market going to go neutral on us? I don't know. The gold-silver ratio is good for arguing that base metals are starting to look cheaper. When you get gold going up where you need so much silver, and that's what you need here. These are ounces of silver you need to get 1 ounce of gold. The higher it goes, it means silver is getting cheaper than gold. To get a base in a lot of these metals, you've got to go the other way historically. Am I saying it always works that way? I know of nothing on a chart that always works that way. But this is favorable. I would have liked to have seen gold not have gotten through 1189.50. Once it did that, I think the chart got very ugly. The silver is different than the gold. First, it's been in an uptrend. Second, it got up to its objective. Now you've lost the upside momentum. It is holding the 18-day average, the first challenge since you got back up here to it. If you take out 1418, you'll have a pattern of a higher high and a lower low. I think it needs to spin more before it decides what it's going to do. In the copper market, I think I mentioned yesterday that this may have been it. You're losing your upside momentum because you're over the 18-day average. I don't look to go short typically markets like that. But the fact that you're losing the momentum and the swing line's down could put this 270.50 level back into play. The resistance in the market, the upper Bollinger Band of 287.50 to the 290.25 100-day average, I don't see a real play here in this market as a chart technician. In the platinum market, the market lost its bullishness. If we come into yesterday, Wednesday, you can see how you held on to the reading that was trying to embed, but when you opened today, you lost it. And when you lose it, often prices make a run for that 18-day average. There's been one strong metal, and I know I'm a broken record telling you that, and it's been the palladium. You know, sooner or later it's going to have to give ground to the other metals. This is long in the tooth, as I like to call it, but it is still bullish. In the dollar index, this probably hurt the metals as a group. Higher lows, higher highs. If the market wants to rally more, the upper Bollinger Band could become the resistance. Everything on the chart, from the momentum, the bias, and the trend, is right now to the upside. We talk about this, and we try to teach you an awful lot with our research at Linn & Associates. Now, it's not limited just to the metals. You have a number of categories that we write about. And throughout the day, our staff is writing different stories. I write my own research. It's different than the Linn research. I write it for my paid subscribers. Linn research is something that our commercials, our speculators, I can go on, option traders, they love, I think they do, what they do here. And there's so many different categories. You choose and pick which one you want. Now you see what our trading customers get. We'd like to give you a free trial. No, you can't get on our list and stay there unless you trade through us or do something with us that generates funds to us. But in any case, how you get it, call us. Go to our website. You can take a look and see on our other offers and take advantage of them. I'm Ira Epstein. You have a good day.